Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, where at the time of this recording we have lost the 20-day MA here on the 4-hour chart. We have also continued to hold above a key area of support at around the $133.2 mark, and that is after fully maximizing our yellow target area down here in the formation of this wave 2. And I believe that whatever we are seeing at the moment is still the start of that massive bounce to the upside in the formation of this wave 3. And before I get further into the technical analysis and also give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after seeing the all-time high, we started the bear market where we had been seeing our prices in this ABC corrective structure in a move that gave us a low at around the $40.1 mark. And after seeing the bear market low, we started this massive bounce to the upside in a move that had been obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that larger Elliot wave contour to the upside. And after seeing the formation of a larger Elliot wave contour, whatever we expected next is a corrective structure in the formation of a larger Elliot wave contour, where we also expected to see an ABC corrective structure, which we have seen over here giving us a low at around the $94.4 mark, and that is the low for that higher Elliot wave contour. And whatever we expect after seeing the formation of a larger Elliot wave contour is a massive bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $403 mark, and that is the minimum that I'm expecting Quant to do on the long-term scenarios. And in the formation of that wave 3, which is an impulsive wave, we also expect to see a 5-wave structure in formation within the formation of that higher Elliot wave contour. And I believe we are seeing such a move right here after making our low for that second wave, where we first saw this 1-2 setup, then started this Elliot wave structure, where I'm terming that as the first wave to the upside, making its peak at around the $165.5 mark. And after seeing the high for that first wave to the upside, we started this corrective structure in the formation of this wave 2 in a move that has now given us a low at around the $126.7 mark. And using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum target area to the lower side in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and that is between the $133.4 mark and the $125.8 mark, and that is the minimum that I was expecting that second wave to the upside, to the lower side, to do. And after seeing the low for that second wave, whatever we expect next is a massive bounce to the upside in the formation of this wave 3, and sketching out a minimum target area in the formation of this wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area at the fib level 1.618, and that is at around the $230.5 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do, where I'm also expecting to see a 5-wave structure in formation, having the wave 5 fully maximizing the formation of that larger Elliot wave contour to the upside. And in the formation of that wave 3, there are key moves that I'm expecting to play out for that higher Elliot wave contour to continue playing out, and we need to first continue holding above the key area of support at around the $133.2 mark. We also need to see a break above the 20-day MA, continue pushing even higher, and also see a break above the key area of resistance at around the $147.9 mark. And the moment we manage to break above it, then I'll be expecting to see a retest before we can continue pushing even higher. And after making our low for this second wave, we have started a move to the upside, which is also obeying the Elliot wave structures, which is a fractal wave within the formation of that higher Elliot wave contour. And if I draw it out, we can have these as the first wave to the upside. Then we have seen a corrective structure in the formation of this wave 2, and I'm expecting another bounce to the upside in the formation of that wave 3, then expect a wave 4, and then push even higher in the formation of that wave 5, and getting to see whether the second wave right here has done the minimum that we expect a second wave to the lower side to do by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and you can see that the target area is between the fib level 0.382 and the fib level 0.618, and at the moment we have fully maximized the area between the fib level 0.382 and the fib level 0.5, and there are chances that in case we lose the fib level 0.618, then there are chances of fully maximizing the target area between the fib level 0.5 and the fib level 0.618, and once we see the low for that second wave, then we can expect another explosive move to the upside in the formation of that wave 5, wave 3, which should give us a break above the key area of resistance at around the $147.9 mark, give us a retest, then continue pushing even higher. And assuming that we have seen the low for this second wave at around the $136.2 mark, we can sketch out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $170.9 mark. Then we can expect a wave 4, then push even higher in the formation of that wave 5 to fully maximize our target areas to the upside in the formation of these larger Elliott wave count 3. So that is what I'm expecting here on the short-term scenarios, and I have given you a worst case scenario where we can expect even lower prices to fully maximize our yellow target area by fully maximizing the fib level 0.618, and that is at around the $135 mark. So there are chances of seeing a bit of a pullback back to the area at around the $135 mark before we can start that bounce to the upside in the formation of that higher Elliott wave count 3. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 46 mark, meaning we have massive room for us to fully support higher prices to the upper side and also to the lower side. Also taking a look at the MACD, we have been able to print a bearish cross, and we are also seeing a bit of an increase in the selling momentum, and that means there are chances of fully maximizing our yellow target area to the lower side so that we can have the low for that second wave, and then from there we can expect the massive bounce to the upside in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.